Okay, so now we're going to be putting it all together and forming the bull FX forex trading strategy. So now I'm going to be showing you on your chart how to add in all the various indicators that will form the bull FX forex trading strategy. So we're first going to be starting with our moving averages. So once more, we're going to be going up to our indicator list. We're going to go to trend. We're going to select moving averages. Right, we're going to keep the MA method on exponential. We're going to change the period to 5, and everything else we're going to leave the same. The only thing we're going to be doing is we will be changing the color or style to aqua. We will then click, or let's just change the line thickness. Okay, the line thickness, you should move to the first thickness, right, or rather the second thickness, and then we will be clicking OK. Now you will see the moving average or exponential moving average 5 appears on your chart. We will then go up again and we will go to trend, select moving average, and we will now add in a 50 moving average, and for this one it will be a simple moving average. Right, we will then make the color red. So we select color red. Thickness is still on the second thickness, and we will say OK. Now you see that we've got a red line that appears on the chart. So just a brief explanation on these two lines over here. As you can see, we've got a crossover of the blue and the red. So you can see that once the blue and the red crosses over, it shows us where the trend starts to form. So as the blue is above the red, it shows us that we've got an uptrend forming. Yeah, as the red crosses above the blue, we now have a downtrend forming. So that is how the moving average crossover works, right? It shows us whether the market is now going up or going down based on the exact point of where the moving averages cross over. So now we're going to be adding in another moving average. So we'll go to trend, moving averages. We're going to select 50. We're going to make this a exponential moving average. Change the color to white. Leave the thickness on the first thickness, sorry, on the second thickness, second line, and we will now select OK. So now you see we have a white line that appears on the chart. So what this white line shows us, right, or the 50 moving average shows us, is it indicates the actual bigger trend of the market. So as you can see here, we've got the blue and the red line crossing over each other back and forth with no real trend forming. However, when the blue and red line is above the white line, it indicates a bullish market to us. So it indicates that the market is moving upwards, right? When the blue and red line crosses over and is both below the white line, it now indicates that we are in a bearish market, right? And the market is in a downtrend. So that is what these three moving averages represents to us. We will then go once more and we will add in our last moving average. Right, so this moving average will be a 200, also set to exponential, and we will make this color magenta. Right, thickness still on the second thickness. We'll now click OK, and we see this magenta 200 moving average appear. So when the market is both below the, or rather when the red and the aqua line is both below the white and the magenta line, it shows us that we are currently in a bearish market when the aqua and red line are both above the magenta and white line. We are then in a bullish market, so it would just be the inverse, right, or the opposite. So now we're going to go on to the other indicators that we've got. So the next other indicator would then be a stochastic oscillator. So with a stochastic oscillator, we will be setting the K period to 13. We'll select OK, and we will see that the oscillator will appear on the chart. Right? What we will then do is we will right click, go to properties, go to the colors. We will then change the main signal to lime, right? And the signal line, which is red, we will change from a dotted line to a solid line and click OK. So that is how your stochastics will then look. One last thing we'll do is we'll go into stochastics again, and we will delete the 30 level as well as the 70 level. So we'll have no levels on stochastics. We will then go to the navigator tab over here. We will open up the navigator tab, right? And you see the navigator window appears at the bottom. We can then from the navigator go to indicators, and when we go to indicators we can actually go through and go into oscillators, and we can actually scroll down and we will find the relative strength index over here. So we will click on the relative strength index from this area over here, right, and we will then drag it over to the stochastics window. What this will do is it will add the relative strength index to the stochastics. So we've got the tab that shows us the settings. We will then change the settings to we will actually leave the settings at 5, and we will just double check the levels. So we'll go to the levels. We'll say we've got a 50, and we'll change the 70 to a 50 and the 30 to a 20. So these are the three levels that we need to have. We need to have a 20, 80 and a 50. We'll then click OK, and we now see that the RSI appears within the stochastics window with the levels 80, 50 and 20. What we then do is we will go on to add in the other indicators, the last two indicators, which will then be the ADX. Right, we will add that in. Right, the ADX with a level 25, and the last indicator, which is the awesome oscillator, which we add in, which has a zero line in it. So what we now can do is we can actually click on these lines that are separating the indicators, and we can adjust how much or how broad the indicators is on the chart, right, to make it easy for us to see everything. So as you see, I'm actually moving these down and making them a bit smaller. Right, let me just close the navigator tab, and I will close the market watch tab as well. Now we've got a much bigger chart, and we can actually see everything that is happening on the chart. So let's get into the basics of the Bull FX trading strategy. So like I explained previously, we will only be trading on the 1 hour chart, right? So you can see we are currently on the 1 hour chart. and the specific currency pair is USD/CHF. So what we would first have to do when trading the bull FX strategy is we need to identify exactly where the awesome oscillator is lying. So we need to identify where the awesome oscillator previously crossed over from a high to a low, or from a low to a high. So that's exactly what I showed you previously with the Fibonacci. So as you can see, the previous crossover for the awesome oscillator, where it was previously at the low and at the high, was over here and over here. So it crossed over from a low, from a high to a low. Right, so this area over here is the most recent crossover. So this most recent crossover we do not need at the moment. We need to pay attention to this previous crossover, as this will indicate to us how to draw our Fibonacci. Right. The second thing we would then do is we would go to our Fibonacci tool. We would then draw it from the highest point on the chart where the awesome oscillator was above the zero. Alright, and we would then draw to the lowest part where the awesome oscillator was below the zero, so the lowest point on the candlestick chart. So we can just double click on this dotted line and just adjust it finely to make sure we've got accurate readings of the Fibonacci. Right, so now you can see that we've got the Fibonacci drawn, and now we need to look for buying or selling opportunities. Right, so at the moment we're going to be looking at our indicators and our moving averages to select the entry point in the market, right? An entry point to whether we'd be buying or selling. So we say that when the market is below the white line and the blue line, that the market is in a downtrend. So at the moment, the red and the blue is crossed over, right? The red is above the blue, so this shows a downtrend. And over at this point, we started forming an uptrend. But we will only confirm the uptrend if this blue and the white is actually the blue and the aqua, the red and the aqua, my apologies, is actually above the white line or above the 50 moving average. Right, so you can see that we did cross over slightly above the 50 moving average. So this will indicate to us that we are in the process of forming a uptrend. Also over here, we've got the RSI, which is still trading above the 50 level, which shows us that the market is in a bullish trend. Right, and we've got the ADX where the green line has crossed above the red line, which shows us a bullish trend, and we've actually got the white ADX line above the 25, which indicates to us a strong bullish trend. We've also got price increasing on the awesome oscillator, which also indicates to us a bullish trend. So as we have identified all those different things, the one last thing we need to look at is the crossover of the stochastics. At the moment you can see that the stochastics has a red and a green line. So the red is crossing above the green line, which looks like it is crossing downwards. What we need to wait for is this two lines to actually cross upwards, where the green will be above the red line. And you see we are now on a support and resistance level of 23.6. So we have broken actually through that level, which also indicates that the market will be moving up. So this looks like we can be looking for opportunities to buy, right? And when we look for opportunities to buy at this level, we would most likely then trade towards the 200 moving average, which is the magenta line, which falls which will be falling around the 50 Fibonacci level or 38.2 Fibonacci level. Alright, so at the moment you can see that this is a corrective wave and this is the impulse wave that we do the Fibonacci on. So the wave that we would currently be trading would be the corrective wave. Alright, so the corrective wave is usually short and we would have to see how far this corrective wave is going to move up, right, to be able to take entry at either the 61.8, 50 or 38.2 level. Alright, so at the moment we still, even though we formed a minor uptrend with the blue being above the red, we are still in a confirmed downtrend or a bigger downtrend as well, where we should be looking for big opportunities of selling the USD CHF. So because we have our impulse wave over here and this is our corrective wave, we should be looking for entry points around the 61.8, 50 and 38.2. So we can actually sell the short, we can actually, sorry, not sell, we can actually buy the short gap that we've got between the 23.6 and these other three levels over here, right? And we can sell to where these levels meet with the 200 moving average, right? We can buy towards that levels, and then we can close off our trade and take our profits. But at the same time, when we do reach confluence at these levels, when the market reaches these price levels and Fibonacci levels over here, as well as meeting the 200 moving average, this would then indicate that we have an entry to sell because we are ultimately still in a bearish market because the aqua and the red is below the below the 200 moving average and the 50 moving average is below the 200 moving average, right? In a ultimate uptrend, the 50 would be above the 200 moving average, as well as the aqua and the red line being above those moving averages as well. So what we're looking for in the market is we are looking for the market to continue doing this uptrend to one of these three levels over here, which are marked as entry, entry, and entry. So it looks like the market will be continuing up to this 50 level, whereby we would then be looking for opportunities to sell. So from that point over there, we would then look for opportunities to sell downwards. And as you can see, if we make this a bit smaller, we've got our Fibonacci extension levels. So we would then be selling to these Fibonacci extension levels over here, which would be the 272 as well as the 618 level as well, right? So that is how we find trading opportunities in the market. And in order for us to confirm a sell once the price actually reaches one of these levels, we would then have to wait for a candlestick pattern to appear. Once it reaches that levels, right, price will most likely bounce off the 200 moving average. We would then have the stochastics doing what it is doing now, where the green and the red line will be crossing. We would also then have the RSI cross below the 50, which shows that there is strength to the downside or the bearish side. And we would also be seeing the red line of the ADX cross above the green line, as well as the white ADX line being above the 25 level. Then we would be able to actually take entries for selling. However, if this does not work out as we have speculated over here, and the market continues to move, actually move upwards, right? If the market does, however, move upwards and break above the 200 moving average and break above the 61.8 level, the market will most likely continue further upwards. We can then look for buying opportunities after the market has broken past the 61.8 level and the 200 moving average, and we can now buy all the way up to the extension levels of 123.6 over here, 138.2, and as well as 1618. And if the momentum of the market continues, we can trade even further to these other Fibonacci extension levels as well. So that's how we determine our entry, our analysis and entry with the Bull FX strategy. So what we're looking for at the moment is for the market to actually move up further to find confluence around the entry levels of the 61.8 or the 50 level or the 38.2, right? So once the market moves up and it finds confluence over there with this 200 moving average, then we would be looking to enter the market for a sell, because as you can see, the ultimate trend is downwards as we drew the Fibonacci on this impulse wave over here, right? And because the 50 moving average is below the 200, and ultimately the red and aqua is below both of those bigger moving averages. If, however, the market does not give a signal to sell once it reaches confluence over here, we would then wait for the market to break above the 200, right, and also break above the 61.8. So we do not only look for the market to break above the 200, but it also needs to break above the 61.8 in order for us to now start looking for buying opportunities in the market, right? So in the case of the market not continuing downwards, the market will then break above the 200 and the 61.8, right? Oftentimes the 200 moving average would not be here, and this would actually be the white line or the 50 moving average, right? Then the same would apply if it breaks above the 50 moving average and above the 61.8, then we would then be trading upwards, and the trend of the market would then have changed, right, once we've broken above those moving averages and above the 61.8 level. But as long as we are below, we are then waiting for entry at these three different levels, right, as well as looking at the different signs of these three indicators which I have now mentioned. So let's just do a quick analysis on another currency pair. So as we go to Euro USD, I'll just open up my template over here. Let me just go back to USD CHF. Just save the template. So we'll save it as number 1 for demonstrative purposes. We'll then say yes. Then we go to Euro USD template. We then open up the number 1 template, and there you can see we've got a template appear. Alright, so what's the first thing we do? The first thing we do is we look for the previous crossover of the awesome oscillator. So currently we are below the 0. So our previous crossover would then be from that high and that specific low over there of the awesome oscillator. Right, so from that low to that high over there, right? Not from that high to the current low. It has to be this completed cycle from a low to a high, right? So the previous high and low of the awesome oscillator. We then look for these specific points on the chart which would be this low point over here, right? And then we've got the awesome oscillator high, which would be this high point over there. We then go to our Fibonacci tool, select that low point, drag it over to the high point, and now we've got our Fibonacci on the chart. It's quite small now, so we'll be zooming in for you to see what is going on. So as you can see, we've got our Fibonacci drawn right on the swing low to the swing high. So when we draw this, we would then be looking for buying opportunities in the market. However, as you can see, the market has dropped below the 50 moving average and as well as dropped below the 61.8 level over there, right? So now there is no more opportunities to buy because we crossed over the 61.8 level, right? Ideally what we would have been looking for is for the market to just come down towards the 61.8 level and then look for an entry to buy at these three different entry levels over here, and then we would have obviously bought the market all the way up to these extension levels of the minus 0.272 and the minus 0.618, but the market failed to maintain that trend and it broke below the 50 moving average as well as below the 61.8, and it has now formed a bearish trend. So as you see, we can look for selling opportunities over here. The stochastics red and green has crossed over. RSI is below the 50, right? And we've got a confirmation of a strong bearish trend because the red of the ADX is above the green and the white ADX line is above the 25. And as you can see, we actually broke below the 200 moving average as well, and we are lying on a 138.2 Fibonacci extension level, as we just broke past the 200 moving average, which then gives us opportunities to sell this market even further to any of the other Fibonacci levels, extension levels that we've got over here. And we can actually see that if we use the basic rule of support and resistance, and as I said previously that Fibonacci maps out support and resistance on the charts, we can see that these levels actually fall in line with previous support and resistance levels on the chart, and we can actually set one of these levels as our first take profit or target levels to sell to. So as you can see that the 238.2 actually falls in line with this support level over here. So most likely we would be able to sell this market down to the 238.2 level and make profit from here until the 238.2 level. Alright, so when we identify something like this, we would then have to start taking entries in the market. And if you looked at the previous videos on the XM website on how to use the trading platform and enter trading positions, you would have known that, or you would know that we would then have to go to new order, right? And now as we identified that we are able to sell because we broke below the 61.8 and below the 50 moving average, and the price is below the 200 moving average as well, and there is more room to trade downwards to these other Fibonacci extension levels, as well as our indicators indicating to us that we are well in a downtrend. We would then look to sell. So we would then go to new order, and we would then set our specific lot size or position size that we want to trade for this specific trade that we're going to be doing, and we will be setting this position size based on the amount of trades we will be taking and the obviously the size of our trading account as well. So in the download section, I will be leaving a guide as to the amount of trades you can take per day with the specific lot size that you can trade per day based on your total account size, right? So our general rule of thumb with Bull FX is that we are allowed to take 3 trades at a time at 0,10 lots, right? So that would, those 3 trades that we're able to take at a time would then equal 0,30 lots, right? For every $1,000 that you've got in your account. So that's just the general rule of thumb. Obviously, if you've got $2,000 in your account, then that lot size per trade would then become 0,20. And as your account size increases, you then are able to increase your lot sizes that you are trading. Right, so what you would be able to do is you'll be able to enter 3 different trades on 3 different currency pairs, right? Or you'd be able to do 1 trade or 2 trades, right? But no more than 3 trades at a time while other trades are running, right? So a maximum of 3 open trades at 0,10 lots. So as you can see, I've actually selected 0,10 lots, and now I will select sell by market. As you can see, everything on this tab we will leave the same. The only thing that we will change is our volume or our lot size to 0,10 lots. Right, the type of order that we'll be opening is a market execution order, no other order, as we only focus on market execution orders, which means that as we enter the market now, the trade will start running immediately from the current price where the market is at. So we're looking for selling opportunities, or we want to open a sell order. So we are then going to click sell market. It then says that your sell 0,10 lots for Euro USD at the current price has been successful. We can then click OK, and you would see that you have entered the market at this level over here, and you will see that it shows your sell order for 0,10 lots, right? So now you are trading, you are in the market. What we then do is we can actually click on this line, and we can now set our take profit level, right? Our take profit level, we said we would then put at the 238.2, which is over here at this Fibonacci extension level. So we then click on this and drag down, and as you see, a red line appears, and we drag it down to the 238.2 level, and this would be our take profit line, right? So it shows us over here one click trading. We can just say yes, I accept these terms and conditions, and okay. Okay, it actually didn't appear. Let's just try this one more time. So we're gonna left click again, drag downwards, and we're dragging towards our take profit area because we just selected a sell trade. So we drag to the 238.2 area, and usually what I do is I don't set my take profit exactly on the extension level that I want it to be. I usually set it a few pips before, just to make sure that the market does in fact hit my take profit, right? Just in case the market decides to reverse a bit earlier. So I would then click, and you would see that it says TP over here, which means take profit. And as I hover on top of that with my mouse, it actually says the potential of profit that I'm able to make with this trade. So at the moment it shows me that I'm able to make $19.20, right, with a 0.10 lot size that I am selling at. And then it also tells me that this would be 192 pips, but in actual fact that is 19 pips, because we don't take into consideration the last decimal, which is the 2, because that is a pipette. So that would be 19 pips that we would currently be making. Right, so once we have set our take profit, right, it says drag to modify, and that's exactly what we done earlier. We can go back to where our sell order was, and we need to set a stop loss. So generally I set a stop loss of 12 to 15 pips, or anywhere between 12 and 20 pips actually, with 12 and 15 being my most common amount of pips where I set my stop loss at. So I will then click on my sell order and I will drag upwards, and you will see that another red line will appear. As I move the red line, you can see that we've got numbers that are actually changing on the red line. Of those numbers, it says 500, or it says rather 5.8 USD, which shows minus $5, right? And it shows minus 58 pips, right? Or 5 pips, because we don't count in the last decimal. So what my take profit is telling me is that if the market does go up in an upwards direction, and it doesn't go down as I speculated, when I set my stop loss, I would then only be losing the amount of dollars or pips of where I have set my stop loss. I won't be using or losing any more money than I want to lose, right? So as I move my stop loss upwards, we will then set it to 12 pips, right? So you can see here we are at minus 122 pips, right? If you take away the last decimal, that would then be 12 pips. We can then leave our stop loss at that level. So now this shows us that if the market does go up in the opposite direction as to what we are trading, that we are protected by a stop loss, and we would not lose all the money in our account. However, we would only lose the amount of money that we are willing to lose. So the stop loss serves as a cushion of protection or insurance for you, just in case you chose or done analysis incorrectly and chose to trade the market in the wrong direction. However, as you see that we've got a potential to lose $12.20, we have, based on our analysis as well, potential to make, let's just see, we've got potential to make $19.20, right? So you can actually see that the market is already starting to move down slightly past our selling order. So that is how we enter our selling trades. If you do choose to close your trade before it hits your take profit level, you can do so. What you can do is you can just go to your selling order, right click on it and say close. This will then close the trade completely. If you are in profit, it will then lock in the profits. If you do that while you are in a minus or in a loss, then obviously you would lose that specific amount of money that it says you would be losing. So once again, as you can see, this is the analysis that we've done. If you're still not sure about everything that I just explained, you can just go back in the video and watch all of this again as I explain the steps. The steps will also be laid out in a Word document or PDF document that is able, that would be available for downloading, with the course, with the exact rules of how to enter a buying market and how to enter to sell in a market. You can then go through those rules and also just go through these or the specific video again that shows you exactly how to use the strategy. So as we went through all the steps of the guide to successful forex trading and all the different indicators, as you can see, the Bull FX trading system is very simple and very easy to use and shows you exactly where to find buying and selling opportunities in the market, and shows you at any given time where you should be staying out of the market or whether the market is trending strongly and gives you opportunities to profit, right? So that is how the Bull FX trading strategy works. One last thing is that we will always be trading on a 1 hour chart because we would be doing day trading, right? And we would always be looking for selling opportunities during the London market and during the New York market or New York session, right? So those are the two markets that we would be looking for trading opportunities in, because those are the markets that has the most trading volume and the most momentum and also the most buying and selling opportunities, right? So as you can see over here, we'll just go over this one more time. The Fibonacci was drawn from the last low and high crossover of the awesome oscillator, which was those points over there. What we were actually looking for was for the market to drop down or correct to the 61.8 level and then bounce off that level upwards towards the Fibonacci extension levels of 272 or minus 272 or minus 618, right? So we would ultimately have been looking for buying opportunities over here. However, the market broke below this 50 moving average and below the 61.8 moving average, which then left us with opportunities to sell, right? To look for a sell in the market. And then what happened was the stochastics crossed over and the RSI fell below the 50, as well as the ADX red and green line which crossed over, and the ADX white line which moved above the 25 level to show us a strong downtrend. And as you can see, the market is lying below the 200 moving average as well, and we are now able to trade to the extension level of 238.2, which falls on a previous support and resistance level over here. You can see it actually lines up with where the market is moving sideways or where the market had stopped or slowed down previously. So what we done was we went to new order, we set our lot size for 0.10 and we left it on market execution and we said sell by market. We then went and selected our order, clicked on it and dragged down to set our take profit of 238.2. We then went to our order and we clicked on it and dragged upwards to set our stop loss of 12 pips for that cushion of protection, right? Or that bit of insurance there so that we don't blow our whole account or lose all our money, so that we only lose what we are willing to lose, right? So our stop loss is set and our take profit is set. So remember, stop loss always acts as a form of insurance. If the market does decide to go in the opposite direction of what you thought it would be going, that it closes your trade out immediately, and you would only lose the money that you had set your stop loss at, and you won't lose any more money than that. Alright, so as you can see, you can, if you do your analysis correctly, you can actually always keep the odds in your favor, um, and you can always keep the risk as minimal as possible by trading with a stop loss and selecting your or putting your stop loss at the correct level. So that is the basics of trading with the Bull FX trading strategy. So we can just go through one more to analysis on one more currency pair. So we can actually go to GBP USD. I will drag this over to the bottom, and we've got GBP USD. I will open up the template. Now you see I've got GBP USD that appears on the chart. So what I do is I look for the previous high and low crossover of the awesome oscillator. The previous high point would be over there, even though it's small. Previous low point would be over here, even though it is small as well. So that crossover would then be the place where I would draw my Fibonacci, right? Because this whole area over here is the current crossover, right? Or where the awesome oscillator is currently lying. So I would draw my Fibonacci from this point to that point on my chart. So that would then be from this specific point over here to this specific point over there. So as we go, I go and select Fibonacci. I'll draw it from this point to that point. Once again, you see that the Fibonacci or the market has come down, and where the 61.8 is, the market actually broke through, right? So the same like with the previous analysis we done, essentially we would have been looking for the market to come down and hit the 61.8, then try to enter the market with a buy and let the buy trade run until the 272 or 61.8 level, or let it run even further to any of the other extension levels, right? However, we can see that the market actually came and broke below the 61.8 or past the 61.8, also went below the 50 moving average, and the red and the aqua line has crossed over. The red line is above the aqua line, which shows a downtrend, and now this market is actually selling. We could have entered the market for a sell trade over here, and you see that the market is selling to these different Fibonacci extension levels, right? Also you see the RSI is below the 5, the RSI is trading below the 50, and the ADX red line is above the green line, as well as the 25 ADX white line, or ADX line being above the 25 level, right? So that is a strong bearish market. Let's just look for another pair to analyze. Okay, here we've got a trading pair to analyze, which is USD JPY. Same thing applies over here. First thing we do, we go to the awesome oscillator, the previous high to low crossover, which was from that point to this point, right? We don't take into consideration the most recent crossover. So from this high point to this low point, as we go and we look at our candlestick chart, it will be this high point over here and this low point. We then go and select our Fibonacci tool. We would draw our tool on those points that we identified. Right, so now you see that the market has moved up or is retracing upwards towards the 61.8, where we would then be looking for a entry level to sell, because as you can see the market is in a downtrend or in a bearish trend, with the 50 below the 200 moving average and the red and blue being below the 50 moving average as well for most of the time. Now as the market retraces, the blue and the red is breaking above the 50 moving average. So when we are at this specific point over here where we find confluence, we will then be looking for opportunities to sell, right? So because we are in a bearish market. However, we cannot sell unless the red and the blue line is below the 50 line, right? And we get confirmation that the market will continue downwards from these the entry points, right? So this is where we would be looking to take entry if this blue and red line was below the 50 line, right? We would then be looking at the RSI to be below 50, stochastics for the red and the green line to be crossing each other as it is now, and we would then be looking for the red and the green of the ADX to be crossing and the white ADX line to be above the 25 to show us that this is now a strong downtrend that is forming, right? And then we would then take entry and we would sell downwards towards these extension levels that are lying below the zero, which would be the minus 272 and minus 0,618, right? However, as we can see that the market is slightly breaking above or has broken above the 50 moving average, and also that the market has closed, right, that these few candlesticks has closed above the 61.8 area. It now looks like we would be looking for buying opportunities, as I had explained previously with the other few analysis that we've done. Right, if the market breaks above the 61.8 and goes above the 50, we will now be looking for buying opportunities. So now we would be waiting for the RSI to cross above the 50. We would be waiting for stochastics, green and red line to cross upwards, and we will be waiting for the ADX green line to be above the red line, as well as the white ADX line to be above the 25 level, which would be indicating a strong uptrend, whereby we would then enter the market for a buy trade. We would then set our stop loss of between 12 and 20 pips, and we would then set our take profit level at the different Fibonacci extension levels, which you see before us. So if we would be buying the market over here, we would then be, if we enter a buy trade, we would then be setting our take profit at any of these following Fibonacci extension levels. If the market does, however, break below the 50 and continue in a downtrend, we would then be taking our entry over here, waiting for the ADX or red line to cross above the green line and the ADX white line to be above the 25 to show a strong downtrend, and then we would trade downwards for a sell towards the minus 0,272 and minus 618 Fibonacci extension levels. And obviously if the momentum is strong enough, we can trade down to the rest of the Fibonacci extension levels as well. So that is the basics of trading the bull FX forex trading strategy. It's very simple. If you still do not understand, which I doubt, you can just go back in these videos again, replay them as many times as you have to, until you understand what is going on, because it is a very simple step-by-step strategy to follow. And like I said previously, there will be a document um, available for you to download, which will list all the steps for buying and selling step by step, right? So once you are looking to follow buying trades, or sorry, once you're looking to enter buying trades or selling trades, you can actually go through those steps one by one as a checklist, to make sure that um, all those different points or criteria are met before you enter your buying or selling trade.